Hello everyone, welcome to CryptoPi. In today's video, I want to talk about how bulls and bears are the same people, and there is nothing as set of people who are bullish, set of people who are bearish when it comes to trading or order book. As an individual, you can be bullish or bearish, but at the end of the day, it's basically the market maker which moves the price, and that is dependent on where the orders are, where the order block is created, and how much leverage has been created. And that is what defines the bullish momentum or the bearish momentum. If you like the analysis and if you find something logical in the analysis, then do hit the subscribe button and show some support to the channel. All right. So first thing, what you see here is the Bitcoin chart on a weekly time frame in the USDT pair. And these two lines, the blue and green lines, are the EMA and SMA, so exponential moving average and simple moving average, with the time period of 37 and 116. Now, why do I have 37 and 116? Is because when you divide 116 with 37, you get 3.14, which is the value of pi, which is quite nice to have to understand the trend, because at the end of the day, market moves in cycles, and usually when you have if you have studied mathematics, you have cyclic patterns and the sine pattern or cosine pattern, and all of that can be represented very well with pi, because there are pi intervals and so on. You can somehow find pi everywhere, wherever there is cyclic pattern and mathematics involved. All right, so I'm using these two moving averages to support the trend analysis, and what you see at the bottom is the relative strength index. So first, short analysis on how the trend is developing. We have seen Bitcoin rally from our last video. After our last video, it started rallying. It reached to almost 97, 98. Let's see what was the exact value. So the high was 97,913, and which is good for people who took a long trade over here. But saying that we are back in the bull market would be premature, in my opinion. So what do we have until now is what we discussed was distribution lines and accumulation lines. And whenever, based on the past patterns in historical, let's say if you look at the chart historically, whenever the price has crossed the distribution line, we have seen price continue to go down up until price crossing the accumulation line, after which either the bottom forms or the bottom has already formed, and then we start seeing some bullish momentum in the Bitcoin price. For this particular cycle, we saw the price crossing in the week of 20th October last year, price crossing the distribution line, and since then price has been trending downwards. And what these trend lines also tell us, that the green one is the long moving average, long-term, long period moving average. So it basically removes a lot of noisy fluctuations in the price action. And the blue one is the short-term moving average, and it's 37, so it's slightly more than a month. And over here, the green one is 116, so that is slightly more than a quarter of a year. On October 20th, the long-term moving average, the green one, was still going upwards. So the slope was directing slightly upwards. If we zoom in here a little bit, the slope was still going upwards from here. Now this one, you can see the direction still going upwards up until this point. However, when we look into the blue, which was the 37-day moving average, we started seeing the downtrend already on 6th of October, so as soon as the month of October began. And this downwards rally, we saw the crossing at this point. Crossing happened of the slow moving average and the fast moving average in the week of 13th October. So that usually, if the crossing has happened, and if it is very close to the distribution line, it already gives some indication that Bitcoin has been in overbought price, overbought region, and now it is time for Bitcoin to go from bullish trend to a bearish trend. So what would happen next? So we would have some pullback rallies where if we consider the topic of order block. So in order blocks, there is something called fair value gap where there is no price action. So this was a fair value gap. So here there is the price which was never there, and price has mitigated this part. There is one more thing which we can think of is the bearish order block, which is this one. So there is still a possibility, if we see some really strong momentum, Bitcoin price can go more like this way, mitigate this order block, and then continue itself up until the accumulation line. These are two ways how I would see the current price action going on. Now coming to why bulls and bears are the same, let's say, entities. If I look at the chart of long-term holder supply, and here what we see is we had a high here in 2014, 2018, over here in 2022, and then in 2025. What this chart basically tells us is the black one is the BTC price, and the blue one is the long-term holder supply percentage. And long-term holders are usually considered as whales. And this price, whenever this price went, a Bitcoin price went in overbought evaluation, long-term holders basically sold at all-time high. And then they started accumulating again. And then when it was making another all-time high, long-term holders were basically selling or not accumulating. They were basically distributing all the time. They started distributing before the all-time high. If you see a pattern here, in this case, the distribution started already when the price was at 916 and price went all the way till 19,000. So long-term holders who accumulated over here, or they mined their Bitcoins at very early in the accumulation phase of price action, they started distributing Bitcoin throughout the uptrend. And when did they start accumulating again? After the all-time high was hit. So you can see gradually the long-term holders, they started accumulating again. Over here, the long-term holders started distributing, so selling it, started taking profit at 13,000, and price went all the way till 63,000. So the distribution by long-term holders begins pretty early, at a very early stage. But the key thing for people like us who are short-term holders in some sense, or we are not whales, we need to keep in mind when does this particular shift from distribution to accumulation start. So when the distribution phase slows down, that is exactly when the top tends to occur. In the last cycle, the distribution already began. However, we do not see it very clearly. Okay, how do I zoom in? Yeah, maybe like this. So distribution already began at this point. We saw again an accumulation, and here the distribution started again. And if we see the level, this was a bit more than 16 million. And this was almost 15 million, something very, very close to 16 million. But here the price was higher than the price here. So the distribution is already happening from this level to this level. The accumulation did not happen as it is supposed to happen when it is at the bottom. Now, if I have to look thoroughly, here we again see that accumulation is happening, but the price hasn't been moving at all, or compared to previous years where when the accumulation begins, the price starts rallying. However, we can say that, all right, the accumulation starts happening. The accumulation starts to happen already when price starts to go down. But whenever there is this accumulation period, you would see that Bitcoin holders, long-term holders, the supply which is held by them starts increasing pretty drastically, and their distribution phase begins when Bitcoin starts rallying. If we look at other chart, which is long-term holder realized price, the bottom of Bitcoin has been marked when price of Bitcoin crosses below or touches the long-term holder realized price. Right now, the long-term holder realized price is at 30,000, approximately 38,000 something. And in the last cycle, the price went below it. Basically, in every cycle, the price went below it. So there is a good possibility that we might go under 38,000. So where does that bring us to? If we are at 38,000, which is approximately here, 30,300, and there is a fair value gap over here. There is an order block here, and there is a breakout structure over here. So long-term holder realized price is at 38, right? Let's write it down. Long-term holder realized price. All right, and this is our breakout structure. Now, if the price comes in this range where it mitigates the fair value gap or the order block, that would be a perfect time for accumulation of Bitcoin. So it would define as the accumulation period of Bitcoin, just like the accumulation happened over here or the accumulation happened over here. It will also be in confluence with what the relative strength index tells us. The RSI has been showing a downtrend since long-term holders have started basically distributing or selling. So here, long-term holders, with every pump in the Bitcoin price, the long-term holders have been distributing. You can see the strength of long-term holders reducing, which is very similar to the strength of RSI. And price is increasing over here. Same thing happens. The price is increasing at every peak in this rally of last year. Now, what could happen next is price. Okay, price going up, going down, making some mitigations of order blocks, and then hitting somewhere like this way, then moving back to its next year's bull market. I think following long-term holders and seeing its confluence with other indicators such as relative strength index or identifying the trend using trend lines, looking at what happens in midterm years, what happens in halving years and post-halving years, it definitely breaks down the cyclic pattern of Bitcoin, or we can say that it definitely helps understand when the bull run is most likely to begin, when the bear run is most likely to begin. And at the end of the day, it's only the terminology, the bullish momentum and bearish momentum. There are no real people who are saying, okay, today I'm going to put some orders and change the whole market. It's basically whole market together. Of course, there are companies and large firms which are involved in creating the algorithm for market maker. But at the end of the day, it's the algorithm which defines whether it's going to be a bullish momentum or a bearish momentum. And that algorithm takes into account what is happening with the Fed, the monetary policy, and so on. I think that would be all for today's video. If you like the content, then do hit the subscribe button, and I will see you in the next one. Bye-bye.